Northeast is the call to make. Whether you're buying your first home or you're a seasoned investor, Terry Kilakos and his team of mortgage and real estate brokers can help. It's simple and it's free. Make your dreams come true. Call Northeast.
Welcome to the Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
And a happy Sunday afternoon, everyone. You're listening to The Real Estate Show. I'm your host, Terry Kilakos, chartered real estate and mortgage broker, as well as president of Northeast Real Estate and Mortgage Agency, and as well CBC Alliance. And today we're going to be talking about something that's been on your minds for a little while. You've been calling the office. You've called the station for it. Reverse mortgages. What exactly are they, and how do they work, and how do we get them? So it's going to be a fun and informative show. Our text lines are going to be open. Our phone lines are open. Joining me, we have my co-host, Merav Marciano, chartered real estate and mortgage broker and vice president super extraordinaire of Northeast and CBC Alliance. Welcome.
Hello. Do I dare say it? Spring has sprung.
Yes, it has. It has. The weather is getting a little bit better. Yeah.
I don't want to jinx it. It is Montreal. We have had surprise snowstorms.
Yes,
before
and
in April.
Chances are we will have.
But it's looking good. I look at the 14-day forecast. It's looking good.
It's looking good. All I know is that this morning I looked out onto our pool and I saw some water.
Ooh.
Yeah, exactly. So I was like, okay, that means that I'm going to have to try and go out there and break some ice and hopefully not put a hole in my liner, but that's a whole other conversation. Feel free to call in with your questions to 514-790-0800, or you could text into 514-800, and don't forget to write your name in the text so we can give you proper kudos. You can also visit us online at facebook.com/Northeast Nordest and facebook.com/CBC Alliance Quebec. And if you haven't done so already, what do the good listeners need to do, Merav?
Subscribe to our YouTube channel,
which is
newsonthego.ca.
Exactly. So before we kick off today's show about reverse mortgages, I do want to do a little bit of a market update. We were off last week, so there's been a lot that has actually gone on, and I do want to talk a little bit about it. So first thing, and the big thing that's on everyone's mind, fixed rates, right? So fixed mortgage rates are on the rise. Variable rates have gone up as well. Interestingly enough, we've actually seen banks reduce the discount that they have been giving to potential. Merav just punched the mic for those of you that it's okay. It's all right. She got mad. She heard, rates are going up. She punches the mic. We've seen the variable rates. We've seen lenders removing, as they don't have as much of a discount anymore off of the prime rate. So that's been going on for the last week or so. And we're expecting the Bank of Canada to make an announcement coming up on April 15th. And when that happens, it's not going to be a surprise. We are expecting at least a 0.25 increase, bringing the overnight rate up to 0.75. What I'm more curious about and what intrigues me is, if we look back, so a couple of weeks ago, 2-3 weeks ago, we looked at the 5-year bond yields. And the 5-year bond yields a couple of weeks ago were hovering around 1.48%. That was low. Okay, so 1.48%. From the beginning of, I would say, and that was March 2nd. Okay, so March 2nd, 1.48%. Today, bond yields are sitting at 2.51%.
Ooh.
So a full percentage point, actually more than 1% in 1 month. So that is an indicator of a strengthening in the economy. Although I'm of the mind that whenever you see something move in a certain direction very quickly, you tend to see a little bit of a correction occur on it. And I have a feeling we're going to probably be seeing that in the next couple of weeks. We'll see a little bit of a dip occur. I think a lot of investors and the markets are anticipating a Bank of Canada increase, so that's having an impact on that.
Okay, and bond yields affect more fixed rates.
Exactly.
And Bank of Canada overnight rate affects more variables and lines of credit.
Exactly. 100%.
Okay, so let's see. But I mean, it hasn't gone up to the point of panic.
No.
It's going up slowly, and it's going up back to normality, if you want.
Exactly.
Okay.
Back to pre-COVID number. Right now, we are in pre-COVID numbers.
Okay.
Okay, so although it might seem shocking to some, where we've seen interest rates go from 1.5 to 3.25 or 3.5, what typical fixed rates are right now, we're back to normal. This is what it was pre-COVID. So let's keep that in mind. Okay. The other thing, home prices are still on the rise in Canada. I saw something that actually, I was looking at this number this morning, and it actually alarmed me a little bit. And you know what I'm about to say? I'm talking about the national average of home prices. And this is coming directly from Korea. So national home prices, January 2020, okay? National average home price was $504,350.
That's across Canada.
Across Canada. Mm-hmm. Today, that number, as of February 2022, is sitting at $816,720.
Whew. That is a
huge increase.
Huge.
So are we going to see a market correction? I do believe we're going to see a market correction. I think that as interest rates go up, I think that you are going to see maybe less people looking to buy. But for there to be anything major that occurs, I believe that you're going to have people all of a sudden running to sell their house. And as long as inventory, as we've talked about before, as long as inventory remains low, you're still going to have probably a balanced market. So I don't think that we're going to be, in the next coming months, after this buying season is done, I think what we're going to probably be seeing is we're going to be seeing a house going up on the market. It'll sell. Maybe we won't be having those multiple offers. Maybe we won't be having, I think that the market is going to balance out. I think we're a ways away before we see a market correction, but there will be one at a certain point in time, at least in the next couple of years.
Yeah, I think that definitely 2022, the trend will continue. Mm-hmm. And then we might see a little bit of tapering off of this kind of craziness, not necessarily stopping, not necessarily reversing, but I think a slowdown in the way things are done.
Absolutely. And MLS sales obviously have continued in February. They're down minus 8.2%. And again, that's not to mistake the price of homes. The price of homes are up. The MLS sales are down. Okay, so if we look at it year over year, we're down minus 0.82%. But this time last year, we were up 39.2%. Right?
Yeah, but I mean, last year, if we look at March of last year versus March of the previous year, because there was COVID and there was sort of a shutdown, that's why it was such a big increase from March 2020 to March 2021. Now, March 2021 to March 2022, we're going to see a slowdown rather than an increase.
So here's the $1 million question. Young couple looking to buy their first house. Would you advise them to buy, rent, and wait? Or what would you advise?
If they've got the funds to buy, go for it. If you don't want to be a part of this
craziness,
craziness exactly, then rent for a little while until you save up and you wait for it to cool down a little bit.
So my philosophy is a little bit different. I'm always, if you have the ability to buy, you buy. If you don't have and you need to kind of put your stuff in order, then do it. But renting, you got to keep in mind the money that you're spending on rent is just basically, it's going out the window.
Yeah.
Right? So you want to make sure that you're doing everything that you can to increase your net worth every single day.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
You're listening to The Real Estate Show, and today we are demystifying reverse mortgages. Feel free to call into the show with your questions at 514-790-0800, or you could text into 514-800. And we got a couple of texts that came in. One is from Gary, and Gary is very confused as to why I would want to chop a hole in the ice of my pool. Ice fishing, perhaps, he says? Well, Gary, I'll tell you why. because I am an extremely impatient human being. Okay. So when I see a little bit of water, what I like to do is I like to go onto, get in there and like stab that rest of the ice, break it up a little bit. So that way the sun can come in and warm up the water a little bit more so that there's not like this layer of ice on top. And therefore, thawing out the pool faster. Between you and me, I think that it doesn't actually do anything. I think it just makes me feel better. I get my frustrations out by doing that, But yeah, that's why I do it. I don't know.
Okay, and we have another text here related to our market update rather than reverse mortgages.
People are putting their homes on sale at stupid, ridiculous prices just to see if there's a fish out there. Maybe they're in my pool. Maybe that's why I'm ice fishing. Fish that will give them the amount they ask. Nothing makes sense out there. Problem caused by real estate brokers. So I've heard that before. I've heard people say that the problem is real estate brokers.
We're always to blame anyways.
Of course. You always need a scapegoat. Yeah. You always need someone to blame. It's your opinion if you think, obviously, that the real estate brokers are the problem. The real estate brokers are not the problem. The market is the problem. Having no supply is the problem. If you have something that you want to sell, and you know that you're one of the few people that is able to sell this product or this service or whatever it may be, you're going to ask for whatever you want to ask. And if there's somebody there that's willing to pay it, that establishes the new fair market value of that property or of that product or service, okay? So real estate brokers are not to blame because clients do have an opinion about what they actually want to get for their home, right? Real estate brokers, believe it or not, they're going to try and explain to clients, majority of them, and the good ones, they're going to say, listen, your house is not worth $10 million. It's worth this much.
Yep.
And then they're going to have to make a decision, the client, whether or not they're going to go with that broker or not. And it's as simple as that. Now, here's the good news for this texter. The reality is that if the house truly is not worth what it's being listed at and what someone is willing to pay for it, the bank is not going to recognize the value. So if the bank doesn't recognize the value, that house is not selling for that price, right?
Yeah.
So although we want to blame the real estate brokers, we want to blame, people and whatnot, what do they say? Don't hate the player, hate the game.
Yeah.
And it's as simple as that.
Absolutely. I agree.
All right, let's talk reverse mortgages.
Reverse mortgages. There's a lot of misinformation out there. There's, in the States it's done differently than Canada. There's been good press, bad press. So I think it's important for us to
demystify it a little bit.
To explain a little bit this product because it's definitely used the right way. It could definitely help a lot of people.
Yeah. So let's talk about it. I'm going to ask you the question, what is a reverse mortgage? So
it's a mortgage,
okay,
which is basically a loan secured on your home.
Right.
But the only difference is that you're not required to make payments.
So no capital, no interest payments are required for as long as you live in the home.
Yeah.
And
that's it. The interest just accumulates.
Yeah. Now, the important thing to remember is that when you do get a reverse mortgage, they're not going to lend you the same amount of money that you would typically be getting when you're getting a regular type of mortgage. So let's say you wanted to refinance a property. The maximum that you could refinance, typically a home, you're looking at 80% loan to value, provided that your income is sufficient to support that. In the case of a reverse mortgage, however, they're not going to go to 80%. They're going to build in a little bit of a margin of safety, a huge margin of safety, actually. And depending on your age, they're going to give you a different amount.
Yeah, so typically it's anywhere between 40 to 55% of the value of your home.
Exactly.
That they lend you, depending on your age. The younger you are, the less they lend you because they want to leave enough room for the interest to accumulate. The older you are, the more they're willing to lend you because they know that it's a shorter period of time for the interest to accumulate.
Yeah. And the thing that I like about reverse mortgages is that if you choose to actually make contributions into that mortgage, so if you do want to pay the interest on it annually, you can. You're just not obliged to. The only thing that you're obliged to do when you have a reverse mortgage, I like Stuttered. I can't speak properly. I can never speak properly.
Mortgage.
The only thing that's important to remember is that you have to make sure that you have proper insurance always on the house. So that you have to pay for. And the other thing that you have to make sure that you're paying for is you have to make sure that you're paying your municipal and school taxes. So as long as you make those 2 payments, or 3 payments, I should say, because it is 3, you're good to go. You could live in there until you're 130 years old, and no one's going to say anything to you.
Yeah, and absolutely. And look, at the end of the day, we have a lot of retired Canadians who, OAS is not enough. Receiving pension from the government is just not enough to live on. And living in a home that's fully paid for and living at the poverty line is not a solution. So this product basically allows them to unlock some of the equity from their home and have that cushion, whether it's a monthly revenue that they get or a big lump sum that they put in an account as a cushion to live on and to not have to basically live day to day and wonder where they're going to get what they could afford, what they can't afford.
So what do you need to qualify when you're applying for a reverse mortgage?
Well, you definitely need to be over 55.
Yeah.
Even if you're 2 borrowers, right?
Yes,
both of them
that's
have
right.
to be. Yeah.
Both have to be over 55.
Okay.
The interesting thing is your income is completely irrelevant because this is a product that's actually designed for retirees. So it's a product that's designed for people that don't have revenues, right? So if you do have revenues that are coming in, whether it's large pensions or anything like that, maybe this is not going to be the right product for you. But typically when we're talking about the typical person that would be getting a reverse mortgage would be someone that is living on government pensions. So income is not a factor. The other thing that's not a factor is credit. Because you don't have to make payments, the only thing that really counts is your age and the equity in the property. Mm-hmm. So, I mean, it's as simple as that. Right.
Yeah, absolutely. And what's good is that, again, depending on your age, you can unlock up to 55% of the appraised value of your home. They're going to definitely appraise your home. And like I mentioned, it's either lump sum or monthly payments that you could take if you're somebody who'd rather spread it out and get, that extra little income.
That's it. And we have a text here from Tommy from Mirabel. Hi, Terry. From your experience, what size is better to rent out? 3.5s, 4.5s, 5.5s, duplex, triplex, fourplex. What do you buy, my friend? So this is actually one of our clients. I recognize his number. For me, I'm all about going bigger. So if you're able to go with a fourplex, go for a fourplex. But the philosophy is whatever you buy, as long as you're cash flowing and it makes sense, then it's a good deal. Even if it's a condo, even though I'm not a big fan of condos. Okay? Make sense?
Okay.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
You're listening to The Real Estate Show, and today we are talking about reverse mortgages. You can call in with your questions or comments to 514-790-0800 or text in to 514-800. And please write your name in the text so we can give you proper kudos. And we got a slew of texts that came in. Okay, so let's get to the first one here. Is the seller of a house responsible for getting an inspection report before selling, or is the buyer the one that asks for it? One agent said, I'm the one, but another said it's the buyer who has to get it. Thanks so much. That's from Julie. Merav, I'll let you answer that.
So, Julie, as the seller, normally you have no obligation to provide an inspection report. It's the buyer who has to do that inspection and have the inspection report provided to them by the inspector. Now, we have seen sellers do pre-inspections, and that's for their own benefit. There's zero obligation to do that. But if you want to do that in order to basically be preemptive with respect to what
issues that might be there.
To find out in advance what issues could come up in the buyer's inspection report, that might be a good idea.
Yeah, I agree. Because truth be told, even when you do an inspection report, the majority of buyers are not going to go with your inspection report because your inspection report is biased, right? Because it's your inspector the person that's selling it.
Yeah, they don't know which
Yeah,
inspector
exactly.
you got.
So I believe that, well, it is the buyer's responsibility.
Yep, absolutely.
But if you want to be a nice person and you want to do an inspection report beforehand, so that way you're filling out your seller's declaration properly and accurately and more in details, by all means, you could do that for sure. Make sense?
Yeah, and there's another text that came in. Terry, I'll ask you this question. Do you think a newly divorced woman in her 50s should rent an apartment or buy a condo?
50 is the new 30, first of all. Okay, let's just get that out there. A newly divorced woman in her 50s, in her prime. So yes, I definitely think that she should be buying a condo or a duplex or a triplex or a single family house. At the end of the day, it's what works for you. You have to remember something. Whenever you buy something, you're building up your equity. You're building up your net worth. When you rent, listen, I'm a landlord. I love my tenants. My tenants pay to grow my net worth. Every single month when I collect rent, my tenants help me grow my net worth. So I do think that it's a good idea to buy if you're able to. Make sense?
And speaking of condos, we have another text, and that's from Lynn. What's wrong with condos? Please explain why you're not a fan.
I am not a fan of condos when it comes to renting them. Okay? Let me make that clear. When it comes to renting a condo, I'm not a fan. Unless you're able to find a condo where you're able to cash flow positively. The problem with condos for rental purposes is that rarely are you able to cash flow properly. And that's what my problem is. When you factor in your property taxes, your school taxes, your condo fees, your mortgage payments, so on and so forth, your expenses far exceed what you're able to pull in as rent. Plus, if God forbid your tenant leaves and you're out of, you're not able to rent it out for a month or two, it's coming out of your pocket 100%, those expenses, right? So that's why I'm not a huge fan of it. But listen, our son bought a condo, and he rented it out, and he's doing very well. And he turns a profit every single month because he got a good deal on the condo, and he's able to collect a good amount of rental revenues from it.
Yeah, but had he bought this condo today at a higher price, he wouldn't be cash flowing.
Exactly. He wouldn't be cash flowing. So it's just important to understand that whenever we're talking about rentals, okay, the key is cash flow. Are you cash flow positive? If you're cash flow positive, it's a good deal. If you're cash flow negative, what's the point? Right?
Yeah. Yeah, absolutely. Unless it's a very short period of time that you're cash flow negative, then that's fine if there's a plan to get into positive.
Agreed.
Now, back to reverse mortgages.
Okay.
We see that this product is very popular with people over 65 who are on pension. And, there's a statistic out there that shows that the average, retired couple has a shortfall of about $20,000 a year with living just on pension. So this became a popular product when basically you can unlock some equity from your home.
Yeah.
You don't have to make payments. And at the end of the day, you leave behind your home minus a small mortgage, whatever it is that you took.
That's right.
So there's a lot of equity available out there in homes, and it would be sad to see somebody living not their fullest life when they have access to this equity. I
agree 100%. I know that there's, I've had this question, would you do a reverse mortgage, Terry? And I'm obviously too young to do a reverse mortgage at this point, but I did it for my parents. So my parents bought a triplex in the Plateau in 1973. They paid $25,000 for it, or $23,000 actually, I should say. $23,000 in 1973 triplex in my land on St. Joseph Street. That building skyrocketed in value to the point that today it's probably worth close to $2 million. But when we set up the reverse mortgage for them, they didn't have much money saved up. My mom was a seamstress. My dad was a taxi driver. They didn't have enough savings to get them through their retirement. So what did we do? We went in and we set up a reverse mortgage, got the money out, and they used that money to live. They used it to do repairs on the building. They used it to kind of get them going. Now, for myself, my parents still live in the building. what do we do as children, me and my sisters? We know that there's a reverse mortgage on this property. We know that when the time comes when my parents are no longer around, that we're going to have to deal with that. We're going to have to get a mortgage to replace that reverse mortgage, right? And then at that point, it is what it is. I mean, it's we just do it. Or what we can do as children is we can actually go in and we can make contributions into that mortgage, into that reverse mortgage, to not have interest accumulate on top of interest. So that is something that's doable.
Yeah, I think it's a big controversial discussion when we bring up reverse mortgages and we talk about inheritance and things like that. And it rubs a lot of, I'm saying children, but we're talking about adults here.
Adults the wrong way, yeah.
It rubs people the wrong way.
Beneficiaries of...
Yeah, to know that they're going to inherit a home that has a reverse mortgage on it. I personally would rather see my parents live well, have
Agreed.
that extra cushion.
Yep.
And so what? So I'll inherit something that has a part of it is mortgaged. Isn't that the fair thing to do? They work their whole life.
Yep.
Why should they live a difficult life in their, in the last 20, 30 years of their life just to leave you something that's fully paid off? It's just...
It doesn't make sense.
To me, it doesn't make sense. And I think that if there is a need, then the reverse mortgage is definitely a solution.
Yeah. And the good news is that today, so once upon a time, we used to there was only one bank in Canada that offered reverse mortgages. It was Home Equity Bank. Today, actually, there's two. There's Home Equity Bank and there's Equitable Bank. Both banks, and both are offering these products. And they're, anyways, as far as I'm concerned, I think that it's great. I have zero issue with them. And the only people that tend to have issues with them are the children of the people that are getting the reverse mortgages.
Yeah.
Interestingly enough.
Yeah.
So I think that it's important that we put things in perspective. You have to remember, nothing is owed to you, right? As someone that's inheriting something, as someone that owns a ton of real estate, tomorrow I could turn around, sell, liquidate all of my properties, take all of the cash, and go travel the world for the next 20, 30, 40 years and leave my children with nothing. Now, is that responsible? Debatable, but it is what it is.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
I want to be on the cover of Forbes magazine, smiling next to Oprah and the Queen.
Hey, I made a song request.
There you go. All right.
So a lot of our listeners don't know this, but Terry was featured in Forbes a couple of weeks ago as a top entrepreneur to watch in 2022. So that's it. I wanted to give you a little kudos, seeing as we hadn't mentioned it.
And imagine, you're the brains, I'm the beauty, right? So in this relationship.
Yeah, amazing. I'm turning off the mic right now.
It's interesting because it's literally been a couple of years in the making, that article that came out, and last year we didn't quite make it, and then this year we did, and it was pretty nice. It was pretty humbling, I have to say. It's actually something that I always aspired to do, and it happened, and it makes me it verklempt me every time I think about it.
I'm going to do claps.
Yeah,
clap,
there
clap,
you
clap.
go. Okay, so here's thanks for that. Okay. I'm blushing now for those of you that can't hear my cheeks getting red over the airwaves here. Do you think a 65-year-old should buy a condo? I'm renting now very cheaply, but people always suggest buying. And that's from Sharon. So Sharon, it's going to come down again to every person is different. Okay. I don't want to sound like I'm saying that every single human being out there should own something and you should never rent. That's not what I'm saying. If it makes sense for you to rent, then you continue to rent because this is what you're comfortable with. This is what you want. The things that I don't like about renting is you're at the mercy, unfortunately, of the landlords. If the landlord, for one reason or another, needs to take over that unit, you can be evicted. Okay, so I'm not a huge fan of renting for reasons like that. So if I'm going to say it like this, if you're able to afford to buy a condo and you would like your own space that you can do what you want with and grow in it and have something maybe to leave to family or friends or whoever you're going to leave to, or just build up equity so that way when you get much older, you're able to take that equity out and then use it for your adventures in life, then I would suggest that yes, condo buying is a good idea. I would love to sit down, Sharon, if you want, we'll happily sit down together. I'll run the numbers with you and I'll tell you exactly based on your numbers what you would actually be able to afford if you decided to go the condo route. And then based on that, you make the decision, yes, I'm going to buy, no, I'm not. Make sense?
Okay, yeah, definitely. Now, speaking of 65, with respect to COVID, we saw, there was quite a bit of eye-opening situations that we saw in retirement homes during COVID. And that triggered a lot of people over 65 to think, hey, maybe retirement home is not for me. Maybe I need to look at in-home care for my future.
Yep, absolutely.
And that's one of the reasons also there's been houses that haven't gone on the market.
Yep.
They decide to keep them, renovate them.
That's right.
And, sometimes you need that equity. You need to pull out some money
to do what you need to do.
Yeah.
And not be burdened by actually having those payments coming in, right? And it actually, there's a really great text that just came in as well. Hi, what is the interest rate on a reverse mortgage? So the interest rate on a reverse mortgage, it's more than what you would be paying on a traditional mortgage. But just like any other mortgage, you have different options. You have different terms. So you can have a 1-year term, you can have a 5-year, you can have a variable. And depending on what you choose, the rate will be different. So you can have it as low as maybe 4.5%, going all the way up to 5.5%, 5.75%. The rates are higher. Whether we're going with home equity bank or we're going with Equitable, the rate is higher. But the reason why they build in a higher interest rate is because there's no payments to make. So they got to make sure that the investors in the long run end up making money on these deals.
Yeah,
right?
Makes sense. Absolutely. And the good thing is you keep your home ownership.
Yes.
That's really important because there's a misconception out there that you don't keep ownership of your home. Yeah. When there's, a lot of people think that the bank now owns your home, but that's not accurate. It's really like a traditional mortgage with no payments. So
one of the conversations I had with a gentleman recently who was looking to get a reverse mortgage, he came to me, he said, look, I'm toying with the idea of getting a reverse mortgage. Tell me all about it. So I sat down with him. We ran the numbers. We were able to go either the traditional kind of line of credit route, or we could have gone the reverse mortgage route. And we ran the numbers, and based on the calculations, we both made the decision at that point. We said, you know what? Reverse mortgage is probably going to be the better solution for you just because you're not going to have to make any payments. You don't have to worry about it. So we started the process. We got the house appraised. We got everything done. And then he comes back to me and he says, I've been speaking to some people. People always speak to people. And everyone says the house doesn't belong to me when I get a reverse mortgage. And I looked at him and I said, what are you talking about? Of course the house belongs to you. No, people are telling me that the minute you get a reverse mortgage, it belongs to the reverse mortgage company. Now, that is 100% false. It's important that you remember there's reverse mortgages in Canada and there's reverse mortgages in the States. In the States, it's a very different animal. Very different. But you still keep home ownership in the States. It's different rules. It depends on who. Yes, you are correct. You do keep ownership, but it depends also on who is doing the reverse mortgage. And a lot of people are going to mistake a reverse mortgage for a rent-to-own program or something like that. Yes. Okay, so guys, you keep ownership of your house. Okay, if we look at what is ownership, my law teacher is going to be proud of me right now, okay? What determines whether or not you own something, right? Usus, fructus, abusus, okay? So what does that mean? To own something. So I'm holding a pen right now in my hand, okay? This pen belongs to me. I own this pen. So I have the right to use it. That's the first modality of ownership. Usus. So I can use it. I can do whatever I want with it. I can collect fruits from it, fructus. So I can take this, I can rent it out to you, and you use that pen. It's the same thing. Let's say you have a duplex and you do a reverse mortgage on it. You could still collect rental revenues from it, right? You can rent out a room in your house with a reverse mortgage, whatever. Collect fruits from it, right? You still have to live in the property, but you could collect those fruits. And the third thing, abuses, in other words, you could sell the property. I could sell this pen to you, right? So as long as you maintain those three modalities of ownership, you're good to go. You actually own the property, right? So this is what you always need to look at it. Anytime someone starts to strip away your abilities to do any one of those three, now you're removing ownership or a modality of ownership.
Yeah, absolutely makes sense. And now before the break, you mentioned you'll talk about the application process. Where do people start?
So first things first, I mean, you could go directly to, Home Equity Bank, or you could go to Equitable Bank, and you can, mind you, I think Equitable Bank would probably send you to a broker, but Home Equity Bank, you could theoretically get things done directly with them. But typically people will call us, we'll sit down with them, we're going to look at their numbers, we're going to see based on the value of the home, their age, and the location, how much money they would be able to liberate out of the home. Then the next step is we file the application. Once the application is filed, Home Equity Bank is going to come back with a quote to us. They're going to say, this is going to be the interest rate, this is going to be the terms. If the client agrees, the next step is to do an appraisal on the property. Once the appraisal is done and supports the value that we said, then we're good to go. We go to notary, you get your money. If the value is not supported, we just retweak the numbers a little bit. Sounds good? Merav, we've run out of real estate. If people want to get a hold of us,
you can reach us at the office at 514-680-4674 or online at nordest.ca.
Till next week, everyone, have a blessed week. Love you all.
Northeast is the call to make. Whether you're buying your first home or you're a seasoned investor, Terry Kilakos and his team of mortgage and real estate brokers can help. It's simple and it's free. Make your dreams come true. Call Northeast.